You've been played. Right now, as you're watching this, hundreds of dollars are slipping out of your pocket every single month, and no one is telling you. The people who are supposed to guide you, the experts, the advisors, the so-called home ownership gurus, are all in on it. They've built a machine designed to make you think you're winning, when, in reality, you're losing. Your rent, your mortgage, your down payment, they've turned your money into their profit, and you're cheering along not knowing any better. If you're renting, they've shamed you into thinking you're wasting money, while your homeowner friends brag about building equity. If you own a home, they've convinced you that you made the wise choice while secretly feeding you a system that drains your wealth. Both sides are being manipulated, and the people getting rich off this scam are laughing at you all the way to the bank. Every rent versus buy calculator you've ever seen is a carefully engineered illusion built to separate you from your money. The mortgage industry rakes in $50 billion a year, convincing people that buying is always the smart choice. Real estate agents take 6% of every sale, whether you get rich or go broke, and your trusted financial advisor? Many of them quietly push homeownership because it keeps you from asking where your money should really be going. The whole system is built to hide the real cost from you. And when you finally see what they've been taking, you're going to be furious. Welcome to Blue Chip Mindset, the winning mindset for success. If you enjoyed the video or learned something new, please give it a like. Now, let's pull back the curtain on the biggest financial trap most people will ever walk into. Here's the first heist, the down payment. They tell you it's an investment, that it's your money working hard for you. That's one of the boldest lies in finance. Your down payment isn't building wealth, it's freezing it, locking it into something that grows slowly, unpredictably, and comes with hidden costs at every turn. Think about it. You put $60,000 down on a house. That's $60,000 you can't touch. It's tied up in a roof, walls, and a mortgage that's already eating a chunk of your income. Over 20 years, maybe your house appreciates and your equity grows, but slow, uneven, and after fees, taxes, and maintenance, that $60,000 might turn into $150,000 if you're lucky. Here's the real kicker. Put that same $60,000 into the S&P 500, historically averaging 7% annual growth after inflation. Compounding does the heavy lifting. Interest earns interest, snowballing into a bigger amount every year. In 20 years, that $60,000 could grow to over $400,000. No stock picking, no guessing, just broad, diversified growth over time. That's a $250,000 difference. $250,000 that you just gave up because someone sold you the dream of building equity. And the worst part? They convinced you to thank them for it. You didn't just spend $60,000 on a down payment. You gave up the chance to turn that money into real, lasting wealth. That's why this is one of the most brutal ways the system robs most people without them even realizing it. But it doesn't stop there. The moment you buy, you're in the hole by thousands in transaction fees that vanish instantly. When you sell, another 6% goes to agent commissions, plus thousands more in closing costs. Your house now needs to appreciate 15 to 20% just to break even, and that usually takes 7 to 10 years. They know most people move before then, which means most buyers are guaranteed to lose money. That's not an accident. It gets worse. Every rent versus buy calculator assumes you'll stay in your house for 30 years. Reality check. Most people move every 5 to 7. These calculators aren't built on reality. They're built on fantasy numbers designed to make buying look better than it really is. If you plan to move within 7 years, buying a house is almost always a bad deal. But don't expect anyone to tell you that. They need your commission check. Then there's the maintenance scam. They'll tell you to budget 1% of your home's value per year for maintenance. In reality, it's closer to 3 to 4% once you factor in everything that breaks, wears out, or needs replacement. On a $400,000 home, that's $12,000 to $16,000 a year. Money renters never have to spend. Over 15 years, that's $250,000 gone. Money that could have been growing your wealth instead. And property taxes? Another silent wealth destroyer. They're presented as a small, stable cost, but they almost always go up, often faster than your income. If your neighborhood improves and property values rise, your taxes will likely increase as well. What starts as manageable can turn into a crushing expense, especially in retirement. Meanwhile, renters enjoy predictable costs while homeowners get squeezed harder every year. Insurance is another hidden hit. Homeowners insurance is far more expensive than renters insurance, and it goes up every year. In high-risk areas, it can rival your mortgage payment. Floods, hurricanes, earthquakes, none of that's covered under a basic policy. You can skip it, sure, but one disaster and you're wiped out. Renters? They get most of that protection through the landlord's insurance and pay a fraction for their own coverage. And here's something nobody talks about: time theft. Owning a home doesn't just drain your wallet, it drains your life. You become the maintenance guy, the project manager, and the repair coordinator. Every weekend is spent fixing broken appliances, replacing worn-out parts, shoveling snow in the winter, or cutting the grass in the summer, not to mention chasing down contractors who never show up on time. If your time is worth even $15 an hour, that adds up to thousands of dollars lost each year on work that renters never have to do. Renters? They call the landlord and go live their lives while you're stuck in endless upkeep, turning your free time into unpaid labor. Even the so-called tax benefits are mostly smoke and mirrors. Mortgage interest deductions sound impressive, but most people never actually benefit because the standard deduction is higher. And even for those who do itemize, you're only deducting the interest, not the principal, which is where most of your money is going. The interest portion shrinks every year, so any small benefit you receive disappears over time. Yet they sell it as if it's a permanent gift, a hidden treasure that magically offsets the enormous costs of homeownership. In reality, the so-called tax advantage is just another way the system makes buying seem smarter than it actually is, while quietly siphoning your cash. And here's one of their dirtiest tricks. They pretend renters blow all the money they save. The calculators assume renters are financially irresponsible, spending everything on frivolous things. It's insulting and it's deliberate. Because if they showed what happens when a savvy renter invests those savings, the case for homeownership would collapse. Let's run the numbers. Say you're deciding between renting for $2,000 a month or buying a $400,000 home with a 20% down payment. They'll tell you the mortgage is around $2,200, but that's before taxes, insurance, maintenance, and opportunity cost. The real monthly cost of ownership is closer to $3,500. If the renter invests the $1,500 difference each month, over 20 years, that grows to over $1 million in index funds. The homeowner? Even with decent appreciation, maybe the homeowner ends up with $600,000 in equity, and that's before factoring in the $80,000 down payment and all those extra yearly costs. The renter ends up about $300,000 richer. Here's the kicker: the industry knows this. Internal studies show that renting and investing often outperform buying in most real-world scenarios. But they can't profit if you make the better choice. So they built a cultural myth that homeownership equals success and renting means failure. They've weaponized your desire for stability and pride against you. They talk about building equity like it's magic, when it's just slowly buying back your own house from the bank while paying interest the whole time. They've made financial flexibility look like weakness when it's actually one of the strongest tools for building real wealth. The truth? Buying only makes sense if you're staying put for at least 10 years, have a rock-solid income that can handle major surprises, and have serious emergency savings beyond your down payment. And even then, you should aim for a home that costs no more than 3 to 4 times your annual income. If you don't meet all those conditions, you're walking straight into a trap. They've sold homeownership as the American dream, but your dream is their profit center. They've convinced millions that rent money is wasted money, when in reality, rent is buying you flexibility, safety, and, if you invest the difference, wealth. They've taught people that mortgage payments build wealth, when really, they build wealth for banks and lock you into jobs and locations you might wish you could leave. So the next time someone says rent is throwing money away, ask them to show you the real math. Opportunity costs, transaction fees, maintenance, realistic timeframes. Ask them why giving up hundreds of thousands in potential returns is considered smart investing. And most importantly, ask them why they never tell you about the $200,000 in future wealth you give up when you sink your money into a down payment instead of letting it grow. Once you see the real numbers, the truth is clear. The smartest choice isn't the one that makes them rich. It's the one that makes you free. If you want to see more videos like this, please like and subscribe.